Unilever Nigeria PLC released its unaudited report for the full year 2023 and the fourth quarter of 2023. Yeah, that's right. So here we go. Revenue 30 billion, 63% jump. Cost of sales, look at that, 190% climb. Their gross profit falling by almost 10%. Operating profit double digits. Profit for the period, single-digit growth. That's for the fourth quarter. For full year, slightly better. So let's jump in. We love doing this. Maybe I should speak for myself. I love doing this. Omobolade Agboola is an energy and consumer goods analyst. He's with the fantastic folks over at Chapel Hill Denham. Good morning to you and Happy New Year. Thanks for joining us.
Good morning. Thank you for having me.
So let's dive in. What do you make of, I guess, let's lose the fourth quarter numbers, right? As far as the revenues, that big jump in revenues, is that as a result of higher costs as opposed to volumes? What's your take?
Okay, so I believe that it's a combination of both, the increase in price and also volume growth. And speaking with the management in recent times, there was a disclosure that volume growth increased, looking at it for year-on-year basis by 3%.
Okay.
So I cannot attribute it just to price increase, but it's a combination of both price increase and volume increase.
I'm leaning towards price increase because it's a high inflationary environment, right?
I understand.
Okay, great. But you're the analyst, so I'll defer to you and we'll take your word for it because you guys at Chapel Hill do great work. Cost of sales. Can we dive into cost of sales here? Massive jump, about 190%. What are the triggers behind that?
For the cost of sale, it's majorly two things. First off is the inflation, inflationary environment. Looking at their inputs, 60 to 70% of their inputs is locally sourced.
Okay.
And in that space, we expect rising inflation to impact cost of sales. And the remaining 40% are imported. And we know that, there's, in terms of FX volatility, that has really affected the cost of things. So we believe that it's a mixture of two things. One is inflation. The second thing is the FX volatility that we saw in 2023. So
if I ask you about their massive jump in selling and distribution expenses, going from 779 million to I think about 1.3 billion, similar triggers? It's not exactly similar triggers because, looking at the manufacturing environment as a whole, we've seen that the major increase in the major cost for the jump in the selling and distribution expenses has been energy costs, transportation costs, and which is not far-fetched. I'm looking at diesel prices. Currently, we see it, at about 1,000 plus per liter, and then that represents like more than a 30% increase year on year. So we would expect that should reflect being a manufacturing company. And also, we think that should also play in the reason why we saw a massive jump in selling and distribution expenses. Every time Arise, because Arise News just got back from covering the World Economic Forum, every time we go to another country, we check fuel prices. The price of diesel per liter in Davos, if you convert it at the exchange rate, is 3,000 naira per liter, which is just insane. Finance costs. Here's something that's insane. This huge jump in finance costs. In fact, if you look at their finance income versus finance costs, net, I think it was negative. 3.9 billion from, I think, of about 380 million. What's here? Is it the credit lines? Help us out with the massive jump in finance costs.
For Unilever, looking at their financials, they don't really take interest-bearing loans.
Okay.
So we cannot say it's interest cost. But one thing I would like to say is in terms of trade payables, like how they source for their inputs from their suppliers is in something like maybe a letter of credit that the banks help them to sort their suppliers immediately so as to ensure efficiency of their processes. And then the company itself pays at a later date. Looking at last year where we saw huge devaluation in the Naira, so we would expect that would impact, their finance costs for 2023 as a whole. So FX devaluation, I think it's a major thing for the consumer goods sector.
If we we have hopefully Monetary Policy Committee meeting in February or so under Mr. Cardoso, the new government. If we continue to see an increase in the benchmark rates, won't that somehow filter through to finance costs in some way, shape, or form? Okay, so like I said, they don't take interest-bearing loans, but maybe for other companies, other consumer goods companies that take loans from the bank to fund their working capital or their processes, yes, of course, it will impact them negatively.
Now, this is, of course, was the big story that they announced last year, April or May, where they said they would discontinue I think it was home care also. So
home care and skin cleansing.
Thank you. The loss from discontinued operations coming in at 1.4 billion for the fourth quarter. Is that fed through here, or what are we looking at for their loss from discontinued operations?
For me, my opinion on on this situation is that this business that they are discontinuing has been margin dilutive for them.
Okay.
It has not fared well for them, especially because most of the inputs are imported.
Yeah.
So that could have led to the fact that they just want to sell off the asset, like just stop the asset, and it happened in September, like in Q4, and so that could have just made them to sell maybe lower than the value,
right,
that it usually would be, and that would have led to the huge loss in discontinued.
Well, hopefully looking forward to their audited accounts so we can get
more information,
and get more information, because we're still dealing with unaudited figures. So I guess profit for the period, when you factor in the discontinued operations, you factor in taxes paid and so on and so forth, single-digit growth for the fourth quarter. What does that tell you? Is that a sign for this year, for 2024?
I don't believe it's a sign for this year, 2024, because 2023 there were significant headwinds. Like I mentioned earlier, FX devaluation, rising inflation, removal of fuel subsidy. So for 2024, we don't expect any of these things to happen again. So that's, just take that out. And the company has proved to be very resilient in the fact that, to improve their top line. Looking forward in 2024, there is a need. They mentioned the need that they have to improve volume growth.
Right.
And in terms of improving volume growth, we'll see they are taking strategies like product innovation, category expansion. And another thing is that, minimum wage is expected this year in 2024, and that would improve demand for, consumer goods products, in which we know that some of their products are very known. They have a large market share in those businesses. So I don't think it's going to be the same in 2024. We expect much more improvements in their performance in 2024. Even if we look at cost optimization, there's been ongoing talks about backward integration for the company, especially the locally sourced inputs. And one of the inputs for their oral care is sorbitol, which can be gotten for cassava. We know that in Nigeria we have that.
Oh, we love cassava.
We have that in huge volume. So I believe that these strategies would reduce, cost optimization. And now that they've discontinued, where we feel that most of the FX pressure is on, we should not be seeing that also in 2024. So it's a good year.
Okay. Thank you for that. Thank you for the detail. I mean, we don't really need to dive too much into the full year, because I think fourth quarter was more instructive. But the full year numbers did look, I guess, better. I mean, gross profit grew as opposed to falling in the fourth quarter. What do you make, I guess, on a full year basis, the numbers?
I think it's a good one. They were still able to record profits year-on-year basis, and the full year clearly shows that they've removed the home and skin cleansing business, and I think that 2024 will actually be better, as I earlier mentioned, that everything would be much. We are expecting a much better result for them in 2024.
Is looking at the latest inflation figures, which I think is a new 27 or 28 year high, 29 or so, is it 29% for December? Food inflation well over 30. Does that continue? Did I get that right? Headline is okay. This is month on month 2.2. But if we put up year on year, I think it's 28 or is it 29? Let's see. Yeah, 28.9. Okay, I transposed my fingers. And then food inflation 33.9. These numbers, are these the biggest headwinds facing consumer goods firms in Nigeria? What do you think?
It's one of it. Like I mentioned, inflation is a very big headwind. Another thing is the fact that there is FX volatility. That's another major thing. For the inflation, it's not easy to, maybe when prices of cost increases, you don't just transfer it
to the consumers just immediately.
Right.
You know, there's a lag in how they do that, and you may not be able to effectively transfer all the old costs to the consumer. So, two major issues: FX volatility and inflation.
Now, you're also an energy analyst, which I keep forgetting because we've been focused so much on consumer goods. I think you already mentioned fuel subsidy removal and what that meant for, I think when you're talking about sales and distribution costs, that, huge jump. Since that big shock took place last year, what's your view on what we would see as far as energy costs possibly stabilizing this year?
Looking at, if we are talking about PMS now, there's not been any significant change.
Right.
So I expect the same thing this year. There's just a lot of things going on in that aspect. But we expect it to still remain relatively stable this year. And we are looking at, Dangote refinery coming on stream, which will provide some respite. Of course, it's not going to significantly reduce the price. Thanks for making that point. It's not going to significantly reduce the price of PMS, but, provide some respite and other things that the government is trying to do in that space to ensure that, the price of PMS and other petroleum products is relatively stable.
All right. The stock hasn't done badly. Over the last year, I think about 62%. Year to date, 24, 26%. I mean, what do you make of their stock?
In terms of fundamentals, Unilever, it's a good one.
Yeah.
And they have even shown their resilience with all the change in their business model, with everything that they are trying to do to ensure that, the company stays relevant in this new time and despite economic challenges. So I believe that, when in 2024, based on how they have reported their financials, because I was thinking that, they've already recorded 100 and something because of the total revenue in that, from all business segments. And when they remove one business segment, it lead to a decline in, revenue and eventually bottom line. I was thinking that, they are going to record it without, comparing apples for apples.
Right.
And, that will send negative signal to the market and, people will start, panicking. But now, looking at the unaudited, they are comparing actually apples to apples. They are removing, even from 2022, the already discontinued operations. That is why we can see year-on-year growth. So I believe that, with this, and when audited financial comes out, and we are expecting a positive performance from them, that will spur positive interest on the stock, and we'll still see some gains in 2024.
Awesome. We're out of time, but real quick, I guess looking at 2024, looking at the consumer goods sector as a whole now, are you cautiously optimistic? How do you think things will play out?
For the consumer goods sector, I believe that this is a year of recovery. The headwinds are, we are not expecting
behind us.
Yes. So they are hopefully behind us, and in 2024 we'll see different companies, try to manage some of the challenges like the FX volatility. We've seen Cadbury, convert the debt to equity. Yeah. We've seen Guinness stop the importation of some product lines because, of this FX issue. So they are changing their business model. They are trying to ensure that, there's improved cost efficiency. So we believe that it's a year of recovery. And, if you are comparing a loss from previous year to a positive for this year, is going to show like a huge gain, and that will spur positive sentiments for the consumer goods sector.
Omobolade Agboola, energy and consumer goods analyst, Chapel Hill Denham. Fantastic analysis. Thank you so much for informing us, illuminating our minds on the consumer goods sector. Really appreciate it.
Thank you very much.